This is Eric Hale with Trader Oasis, and this is the Everyday Trader. We promised we'd have an update to talk with you about some inflation data that we got today. Today's Friday, the 31st of March, and joined with me is, of course, is Greg Jensen. What's happening, Greg?
I got a new camera and I got a new microphone.
You look sharp. You look even better. If that's even, is it even possible for you to look better?
Showered today. Maybe that's what it is. That's what my kid would say, right? I'd tell my kid, "Hey, you look good today." "Oh, I showered today." That makes sense.
Sometimes that's all you need. So yeah, we get inflation data today. To be honest with you, my initial reaction, it's interesting. People look at the market and say the market went up, so it must have been a good number. So to be honest with you, I don't think it was. This is a chart of what happened. PCE did come down and maybe lower than some expected, but I'm not going to do technical analysis here. But if you look at this chart here, we need to get down to 2%. And I mean, I don't know if you do some sort of extensions, depending on the PCE or the core. So core it takes out food and energy. The reason they do that, because it's a little bit less volatile, that food and energy can be very volatile. But the trend is to get that core down to 2%. I mean, if you draw took a moving average here and did some sort of extrapolation, we're out in 2026 or 2027 before we get down there. We need to see some pretty steep drops here. Barron's, I think, was a little bit, I like their headline a little bit better. It dropped a little, but it's still high. That's my reaction.
And that was the reaction I think that was the reaction that the Fed had as well. I mean, Susan Collins, the Boston Fed president, was on with Mike McKee on Bloomberg this morning and kind of said those exact words that you just said as well, is that, hey, it was lower than last month. It's good. It's trending in the right direction, but it's still quite high. And the battle with inflation is still ongoing. But like you said to begin with, I mean, the market has reacted today like, oh, well, Fed's done. We got a cooler than expected inflation report. And I think part of that reflects the short-term volatility, 0 day till expiration option mentality of the market right now, is it wants to day trade news. And we get these, knee-jerk reactions when the news event comes out. And is it in the right direction? Yeah, it probably is. It's probably okay that the market rallied on this. Is it a little bit ahead of itself? Maybe. But is it also sparking a little bit of, FOMO today? Also, maybe. And so we may run for a little bit. I think if you look at some former levels on charts, I think it wouldn't be unexpected to see the S&P rally up to 4,200 right now on this news. I think before I got really bullish, I would have to see that high taken out, where it looked like we were going to start to trend higher. And maybe we do that in the summer. We'll see. But I think you're right. I think the PCE report was not nearly as bullish and optimistic as the market is taking it right now.
Yeah, so interesting here. I'm with you. The thing I immediately go to is to look at this, the Fed Watch tool. Got to be careful with this. But what I'm really looking for is movement here. If we look at where we were a week ago, we were saying that we're not going to change rates. I mean, they're 83% a week ago that we weren't going to change rates. And now we're hovering right around 50-50 coin flip as to whether or not we raise rates. Seeing inflation come down a little bit. But I think, that's, we talked about this a little bit in the last call or the last Everyday Trader that we recorded, is that the Fed wants to see economic activity slow down, and people are freaking out. Like, what is the Fed doing? They're slowing things down. They're hurting business. Like that's, are you listening? Because that's what they're trying to do. And this whole banking crisis, I think, is worked out pretty well, whether this was something that was engineered or something that was going to happen anyways. It's working out in favor of what the Fed's trying to accomplish by everybody's talking now about ratcheting credit making credit more difficult. So I think that's given a little bit of hope, that hand in hand with inflation coming down a little bit, revisions down a little bit for January. So yeah, it wasn't, I expected inflation to come in a little bit hotter, to be honest with you. I traded and actually did a bearish trade on the SPY and I ended up closing it for a very small loss because it went up. And so if the stock went down, if the SPY went down, it would have done really well. But we are definitely in this trend, is your friend here lately, looking at the, looking here at the S&P 500.
Yeah, the breadth is pretty solid in the S&P 500 today too. I think advance to declines are like 3-to-1 right now. Most of your declines are in the typical type of sectors that you would expect when you have a risk on type of move. You know, your utilities, your defensive sectors are lower today. And it's really being driven higher by big cap tech. I mean, Google, Tesla, Apple, Microsoft, NVIDIA, Meta, just all higher today. The software space also having a really good day. You know, Salesforce, this ServiceNow as well. There's a lot of Autodesk. Those types of names are higher today. And I think there may be some momentum behind it, at least in the short term. That is until we get another piece of data. I think one of the more interesting stocks lately, to be honest, for me, has been Intel. Well, Tesla too. You know, I know Tesla has some news over the weekend. They have some reports, some auto sales reports, but Intel has been on an absolute rip to the upside right now compared to its normal pattern. And I don't know why. Their last earnings report was not good. At least I didn't think it was good. And maybe it's because they're finally cutting a bunch of staff and downsizing and trying to remain profitable. But yeah, some positive activity going on in Intel right now. Stock's almost above $33. It's been a while.
Yeah, broke a historical level of resistance here around, you know, a little below 31. Hadn't been able to break above that 31 level here and just a couple of days ago. So that's what we tend to see as support becomes resistance, resistance becomes support from a technical standpoint. So there's something there, breaking above it, getting a close above it, and continue to rally higher. And there are some fundamental stories, and I'm glad you bring it up because next week, let's preview. We're going to have our first guest on the Everyday Trader, and it's a good friend of ours, Barry Norton, who's been around. We've known him for I don't know how long, a decade and a half.
Long time, yeah.
He's been a client and worked with us at OptionsANIMal, and he is a domain expert on. He's done some really cool stuff, and I don't know what he can say because he's still covered by NDAs. But let me just say that you've touched products that he's helped design.
Yeah.
So without dropping names to anybody, products that you've touched and you've held in your hand. Barry has helped design some of the features that you put your hands on. So he's pretty humble about that, but he certainly understands this semiconductor market and how all the players tie together. And I'm really excited about it because we were preparing for this. Him and I were preparing. We talked for an hour and a half. So I hope we don't talk for an hour and a half next week when we have him on.
I'm sure we will.
Yeah, we probably will. Out of
sure
respect for him, though, I don't want to do the whole time. But really, he's going to do a deep dive and talk about he's really deep into semis, and I think there's a lot that people can take away. Just sort of a benchmark him, Barry, as a trader, what other retail traders, the sort of effort. I think it's good to know who you're competing against and who else is trading out there, and the sort of level of effort and detail that he puts in. Doesn't matter what industry. I think you'll learn a lot from that, but also about understanding opportunities in the semiconductor market. And, you know, we keep thinking we hit this threshold, and Barry's really excited because we're about ready for nearly a step change in computing power. And he's going to tell us a little bit about that and why, and maybe how to play it. So that should be fun.
I'm interested to get his take on, I know it doesn't really fall in semis as well, but I'm interested to get his take on artificial intelligence as well. And, you know, what play, you know, obviously he'll know the semiconductors role and, you know, the demand for artificial intelligence, but how much that might change. As, you know, I know you and I talked a little bit about AI, and the demand, the piece that Goldman Sachs put out on how much that's going to add to GDP by what was it, 2035?
Yeah, 6% global GDP impact. I think it was somebody on Twitter, maybe it was Brent Donnelly or somebody put out yesterday that people on this whole, generative AI, there's 33% are people like it's going to change the world. 33% are calling doom, and 33% of people don't care. It's somewhere in between there. But I actually lean a little more bullish. And I was actually thinking that maybe we should talk about this in our I don't know if you know that Austin is a tech center and there's a lot of cool technology going on there, that maybe we do a deep dive on the impact of generational AI there and talk about how that could impact and look for opportunities. Maybe we talk about it there, but
yeah, sounds good.
What about opportunities now? What are you talking? I'm going to throw you on the spot because today's your day to share a trade with our members at OptionsANIMAL. What do you?
So I actually I just found my trade while we were talking.
I love the way you multitask.
Seasonal. This is a seasonal trade. It's
I thought the name of the company was seasonal.
I know it doesn't feel springtime where I'm at because I shoveled snow again this morning. But I know the snow is going to melt eventually. I know everywhere else in the country, the snow has started to melt. And this is the holiday season for Home Depot and Lowe's both. But I actually think Home Depot.
Look at that move today. Nice.
Home Depot's having a nice day. I think this is a trade. I'll probably look at doing some type of either calendar spread, maybe a bull put, and maybe a credit spread on Home Depot right now. Because I think this stock has a chance. If the market decides to get bullish, I think seasonality wise, this is people are out buying flowers and planting trees and looking at mowing their lawn and fertilizing their lawn. And this is the time when Home Depot does well. So like I said, this is the Christmas season for Home Depot. So I think this will be an interesting trade.
I'll throw out a couple ideas. I happen to think here's one that's pretty simple. I'm going to talk about Netflix, but before, let's talk about Tesla. So Tesla's the big deal is that they're going to make an announcement this weekend on quarterly deliveries, and the estimates. I'm going with 424,000 cars. 420 is sort of the consensus, and it will be an all-time record for deliveries. I think that's part of the reason we're seeing this big move up here today. I'm thinking a YOLO trade. So a short-term long calls, actually a call spread. So an out of the money, buy a call, at the money, sell a call, out of the money that expires next week. So April 6th, that's a really cheap trade. You could do that for a few bucks and maybe make a couple $100. So it's a gamble. It's a YOLO trade. I wouldn't just buy calls. But I think that we're going to see volatility drop a little bit. So to hurt this the calls, I think a call spread will be a little bit better. There's another trade that I'm looking at that I'm thinking about sharing with people while we're talking about sharing stuff. This one's a little bit out of the box. And I'm looking at a double diagonal on Netflix. So Netflix has earnings coming up on earnings is on the 18th, April 18th. And so looking at a trade that takes advantage of selling the expiration that's the 21st and buying 2 weeks out, buying the May, you've got to trade. The reason I do this trade is a Vega positive trade. And if you look at this chart right here, this is the 20-day implied volatility. So that this encompasses earnings, but it's not. If you look at past earnings events, you can see where the 20-day implied volatility goes. We are very low. I expect that we're going to have a major ramp up in implied volatility, this cyan blue line here that we're looking at. So the stock hopefully stays range bound because this trade does really well. It actually got quite a bit of flexibility in terms of where it can break even. Break even's at 303 and 392, which is pretty much where I'd expect it to be in the next 2 or 3 weeks before earnings. But anyways, this is a strategy I'm looking at doing with people actually, this is a Trader Oasis community. I'll share more details with that community later today. But give some insight, give some people a little bit of hints of what we do here at both Trader Oasis and OptionsANIMAL. Anything else before we wrap things up?
Be cautious about getting, I know there's a lot of reasons to try to be bearish right now and concerned about going into a recession, concerned about, levels of debt and the cost of it. And I know we've talked a lot about that, the last 6 months as we've been going through some of this stuff. And you have to be cautious about being bearish and doing only bearish trades, even if your expectation is bearish. My recommendation, what I always, try to teach people when they're looking at risk tolerance is in building a risk strategy, is recognize the underlying momentum of the market is always up. It wants to go up. And it has to do with the ever-present, consistent buyer of Vanguard and Janus, and the ever-present, every 2% of my paycheck goes to my 401k that gets put into a mutual fund, that they're constantly buying the market. Recognize that doesn't change unless we get really high unemployment, which right now we don't have. So there's a buyer in the market right now. It doesn't mean we still can't have bearish volatility and rips to the downside when the Fed decides to move, but be careful when the market decides it wants to go bullish. Don't try to predict that I'm going to get bearish now just because the market's up, because we could be irrational to the upside for a while. Trade the trend.
Good. Speaking of that, just one of the things that came out in this personal income, part of the personal income outlays report, was the income was up pretty strong, and we saw a fairly good, still keeping below 200,000 for new claims this week. So the labor market in terms of wages and jobs and unemployment is still very strong. So next week, wait a minute, do we get the unemployment report next week? That's going to be the big one, I think. So it's a holiday next week.
I don't think so, with it being Friday.
Friday's a holiday. So
yeah, it's Good Friday. Market's closed. So I don't think we get it till the following Friday. I haven't looked.
Actually, I think it is on the 6th, because last week they did something weird. Last month they did something weird. Yeah. No job. You're right. I think it's going to be the following week. Oh no, it's employment situation is coming out on April 7th, even though it's a market holiday. So that is a weird one, that on Good Friday, when the market's closed, we'll have the employment situation.
Ooh, that will be interesting.
Yeah, because there was something weird that happened. It wasn't on the first Friday last month, and I think they didn't want to do it 2 months in a row. So even
I don't know when the last time we had a jobs report on a day that the market wasn't open. Could create some volatility for Monday for sure. Probably some extra volatility for Thursday.
You think that gives room to put some bad news, to pass along some bad news, maybe?
Yeah.
Are you a conspiracy theorist? The data's the data, Craig.
I'm 100% conspiracy theorist. They're conspiracy facts. I haven't been
because you're paranoid.
Alien,
just because you're paranoid, that doesn't mean everybody's not after you.
That's right. Nirvana quote at its best. We got to end it with a Nirvana quote. Kurt Cobain.
Yeah, and the CBDC thing, by the way, is getting a lot of legs here lately. So we'll bring that up in future recordings for everybody. So everybody have a good weekend. It's fun talking to you. We'll catch you all later.
Thanks, everybody. See you at the next one.
Bye.